Thank you so much, all of you, for taking out the time as always and sharing with us the insights, the growth drivers, and the future bets for Wipro. Abid, starting off with you, something that we discussed in the press conference as well. It's been a well-rounded growth. Largely, estimates have been met. The buyback was also impressive in what the street was expecting. While Q1 is a seasonally weak quarter, apart from factors that you spoke about, completion of certain large programs, delayed start of fresh projects, what else is really driving this, caution as far as Q1 and the start for the next financial year?
First of all, thank you, Rahul, for having us on the program. I think we've executed well in Q4. And we have, as you rightly pointed out, some seasonality, which is Wipro specific in Q1, and there's a market seasonality. And as we look at going into a guidance, we give the guidance in what we see, and that is the range that we see right now. And we will execute on it during the quarter.
But FY20, you've been optimistic that starting Q2 is when the growth would also come back in terms of, and the other engines would also start firing for the company.
Yes, so our pipeline, we exited with a very good order booking. Over the last 2 or 3 quarters, we've had some highest order booking in a quarter in our history. We've got a good pipeline, and we are winning a fair share of our deals, especially in the areas of the future, digital, cloud, cyber security, all of that. So that makes me feel that FY20 will be better than FY.
All right. Last question, Abid, to you before I go to Jatin. We have quizzed you enough as far as the breach of the internal systems are concerned. But, apart from what you've discussed with us, tell us, would you have to reach out to clients and assure them that this is a one-off affair, you've done enough? And do you see this really hitting client sentiment and the legal, headache that you would have in the coming quarters owing to this? Are we reading too much into it really?
So we are a very transparent company, and we do whatever is right for the customer, and we are doing with our customers, absolutely. And we are getting very good support and cooperation from our customers. Rather, some of the customers have appreciated us reaching out and making sure that they don't have anxiety around what has been said about it.
Okay. Jatin, coming to you, the question on margins really every quarter on quarter, but we've seen the momentum pick up, operational efficiencies. In spite of the rupee, you've been able to hold margins. But the big question is, how sustainable is this going forward? What are the levers do you have to really ensure that you maintain this momentum, considering wage hike will come into picture with Saurabh granting out those fat paychecks and hikes to employees in the coming months? So what really will really help you maintain it?
So let me start by saying that I hope Saurabh is listening to you. But let me tell you 2 facts which are very important. One is the fact that we have expanded operating margin through the year, which is 1.8%. It's a sizable improvement. 2, you are exiting the year at a higher rate than the average of the year. So effectively, you are better placed. And now going into future, certainly we have to invest because growth is priority, and we will invest in our big bets. We will invest in retaining, growing, and encouraging our talent in Q1 vis-a-vis the MSI. So that will have downward pressure on margin in Q1. But I think our teams have done a fabulous job on automation, fixed price productivity, overall management of utilization. So I am very encouraged by the way we have managed our operations in this year. And we have every intention to retain that rigor as we get into the next.
Even as you go about investing those gains in other crucial areas.
That's correct.
All right. Bhanu, so coming to you, in terms of the business units, take us through the color really. While BFSI has been stable, we've seen healthcare and manufacturing technology. Healthcare is something that you pointed out in the previous quarter also. When you would see all of this sort of ease out and come back to the stable levels that we saw them a few quarters back really?
So if you look at the business mix, right, as you mentioned, BFS has been doing well. So is consumer BU for us and ENU. We have seen a good momentum in these 3 of them. And you see certain amount of lumpiness and choppiness on the health sector right now. If you look at this quarter specifically, this quarter health business has done very well. Right, going into the future, into the next year, we do see certain amount of choppiness on that part. On the communications business, right? We have got our, like we explained to you last time, we got new strategies in place. We got the new offerings in place. Our offerings are much more contemporary to the market needs right now. So we do see certain amount of growth coming in back into the communication business. The tech business has been a little choppy off late, but we do believe that it will come off the choppiness very soon.
But BFSI continues to sort of have that momentum.
BFSI is a large piece of our business, right? We have shown good growth momentum in that area. Obviously, it's a large base effect as well right now. So we're optimistic about that business. We continue to be optimistic.
All right. Saurabh, coming to you, 2 questions. In terms of wage hikes, really, how would they look for? A lot of it I know will come in Q1, but how will they look in this financial year? Also, in terms of net addition, if you were to see, you added about 11,000 employees this year. We've seen stronger numbers come from your peers as well. So would we see that momentum continue, with this 11,000, with this become 20,000, also considering the localization efforts that you're driving in the various geographies that you operate?
So Rahul, let me answer both the questions. First, we will be giving our salary hikes effective 1st of June. We have not decided among the hikes, but very clearly we will be, as per industry, we need to make sure that our best people are ring-fenced and are rewarded for the good work they're doing. So we'll be share with you as in closer to the date when this happens. So that's on the salary increase part. On the second part, as I said, we had 11,000 people add this year. But if you look at it, you'll have to see this in the light of a few things. The entire people supply chain. We are looking at very robust hiring. We are doubling our campus hiring this year. We have increased our localization across all our big geographies across we continue to hire in our new areas of digital and the new technology areas. And we continue to look at investing as we look for growth. So with all this happening and utilization peaking up, if you see the last 4 quarters, we have seen a trend. Very clearly, we are preparing ourselves for the growth in FY20. And when you look at numbers, don't look at numbers unilaterally, because there is an element of non-linearity, automation, bots, which is also coming in, which also builds into our revenue. So if you look at, you have to look at all the pieces together. It's a jigsaw when it moves forward. But the bottom line is key for our growth. Right investments are happening across the globe. A lot of infusion of fresher talent into the organization.
All right. So coming back to you, the last quarter also, you indicated that you're looking out and watching macroeconomic developments. There've been buzz on and off about a slowdown in the US. Your peers at least have brushed off concerns, saying, so how have the client conversations really panned out? Is it too early really to call out macroeconomic factors now?
So Rahul, if you look at what we mentioned earlier, right? We are seeing a robust demand environment. Right, our client conversations are strong, especially if you look at the nature of demand that we are generating. We are generating demand in all the 4 areas that we think are very important for our customers, right? Digital, cloud, cybersecurity, right, and also with respect to industrial engineering services, right? So we are seeing a good nature of conversations with our customers. Our propositions are resonating well with customers. An indicator of that is the order book growth that we have seen in the last few quarters, right? So we have seen a robust order growth, and so we are having our fair share of large deals. So we do see a good demand environment right now, robust demand environment right now.
All right. Lastly, Jatin, want to end with you in terms of the buyback plan. Really, that was something you'd indicated from the start in terms of returning shareholder value. But with what's still left, are you still going to scout for those opportunities as far as inorganic? Because Wipro has been a very acquisitive company. Would that trend continue as you go about returning shareholder value?
Yes, of course. We have 38,000 crores gross cash, net cash about 28,000 crores. So even after 10,500 crore of buyback, we have sufficient and more to pursue where we feel there are right opportunities in market, and we actively, continuously look at those. So we remain quite affirmatively positive whenever right opportunity comes.
All right, works well. Thank you all so much for taking out the time and joining us. Wonderful having you. Thank you so much.
Thank you very much.
Thanks, Rahul.